Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals, and gold continues to trade higher, actually shaking off most of the bearish momentum we saw from that trade back to when we saw the trade at just about 1,300 down to about 1,238. We bounced about $40 recently here, and it's been pretty much a straight trend higher. Now, a lot of that momentum that we saw to the downside has been eliminated, but I wouldn't yet call it a bullish trade. I think what we're seeing here now is more of a year-end trade. There certainly is always concern when you see volatility spiking up in the cryptocurrencies, and we've seen moves in treasuries and equities still on all-time highs. So there's a reason to be long gold here defensively, but certainly takes us out of that bearish trend that we saw on the recent lows. And the dollar, while it has been weaker year to date, you go back to January, look at the dollar index, it's been just a straight slide lower. We have seen moments of positive upticks with Washington getting its act together, with signing of tax reform, with treasury yields going higher. There seems to be, the dollar seems to be gathering itself a little bit, but it's been trading very stagnant. And even though the inflation numbers are starting to turn up a little bit as well, we are not seeing the dollar spike, which would have prompted a lot of the gold selling that we saw recently, and it's been kind of trading sideways. So I think that the dollar being kind of uncertain here with what's going on, also helping with the gold trade. And lastly, positioning. That's been one of the key movers here of gold. When we saw the big trade lower, we saw spec longs getting just rinsed out, or at least running for the exits, and we saw them hitting about a 3-month low for their long positioning as of last week. Now, lots changed since last week, and I think that as we see this price increase, this trending move higher, it suggests that those longs are probably scrambling to get back in, especially now that we're back north of 1270. So I think that a lot of this rally here started out with spec longs maybe getting back in the market, perhaps covering some shorts that were maybe put in on higher levels. But ultimately, I think that as we head into year end, this was the kind of move we expected when prices were higher. So this would have put us, north of 1,300. But since we saw the big sell-off in the rinse in the position side, I think a lot of this now is kind of muted the up trade, but certainly spec longs are back in. We won't get that confirmation until later today, but I think as we go forward into year end, we have one more week of the year, we should continue to see this trend at least until we get more from the Fed, and we don't get those decent minutes until Jan 3rd. So that'll kind of be the next it moment for gold and the Fed and the dollar as we look forward. So right now, gold holding its trend higher. Not quite bullish, but certainly on the upside, on the top of the neutral scale as we head into a Christmas weekend. This is Todd Colvin coming to you from the floor of the CME Group.